Hey, this is Sasha Evdokov, and thanks for joining me here at tradersfly.com, where I share with you insight about trading, investing, and the stock market. Now, in this week's episode, what I'd like to do is share with you the trading time frames or the trading time zones, just so you can see when the market is open and just some of the things that go on and happen throughout the day within the markets. All right, so what I've done over here is just write down a few notes throughout the trading day and trading session. Now, these notes are not something to really pay attention to specifically in the sense of, hey, well, because Sasha said this is going to happen at 10 to 10:30, then that's what's going to happen. These are just more guidelines in terms of just general human behavior, human psychology, and how the market works and operates. So typically the trading day, it starts right here from 9:30 and it goes all the way down to the 4 o'clock session. So that's our trading time frame in terms of regular market hours. Now, we do have some pre-market hours right here, which are from 6 to 9:30. And that is, you can do some trading, and you can do some trading before the market even opens. Now, the problem with pre-market trading is that it's early trading. The liquidity is less. There's less people trading. So sometimes the fills that you get are not really good or great. So you need to make sure you use limit orders. Now, there is even before this a very early market trading, somewhere around 4 a.m. and so forth. But again, liquidity is very tight. If you're just getting started, stay in that, I would say 9:30 to 4 range. And I'll even zoom in and tell you even more so where you should stay when you're executing your trades, just for safety's sake, for risk's sake. Okay, so and at the end of the market, we have this 4 to 8, which is aftermarket hours. So you can also do aftermarket trading, just like you can in the pre-market. But those, again, the liquidity is tight. The market is closed. People are starting to pack up. They're going home. Whatever it is, aftermarket, pre-market, those things normally I would say stay away from at the beginning. Later, as you get better at things, then you can potentially put on some trades. But for most people, I would stay away from those regions or areas. Okay, so as far as the market goes, the market opens right here, 9:30 a.m., and that's 9:30 Eastern time. Okay, so it opens at 9:30 and it gets things going. From 9:30 to 10 is this open that happens. Now, I typically tell people to stay away, at least if they're new, that first half hour, stay away from the market. And that is because you can have this reversal that happens from 10 to 10:30. And this is just something I've noticed over the years, and it's pretty classic if you do some research about market time frames and time zones. Usually you'll have an open, sometimes it's a pop, and then you'll see the reversal. And if you've gotten into trades really early, especially right when the market opens, and then you see things not going your way or your favor, it is probably because you're catching them in the open and you're having that reversal kick in. Now, there are some people that'll say, hey, yeah, he's wrong. You know, some people say, go ahead and trade the open. That's when you get the best rates because then you can get all this additional time. And potentially that's true if you know what you're doing. If you really know and understand what you're doing and you're already a professional, then yeah, by all means, go ahead and trade the open. And if you really have a plan in mind, then by all means, trade that open. But for most people, the issue I see, the problem with trading that first half hour is you get these reversals. And those reversals tend to fake out a lot of beginners, a lot of new traders, and they can really start continuing. So for example, if the stocks open high and they start moving to the upside, and then you start getting a reversal and they dip back down completely in the other direction, they continue moving lower the rest of the day, then you'll just sit there or look at the screen and go, what happened? And you'll really start wondering, what's going on? And that's just because of that reversal. Okay, so once this reversal happens, or this 10 to 10:30, if the reversal is going to happen, it's going to happen during this time. Now, the reversal doesn't always happen, doesn't happen all the time. I'm just saying that if it comes, it usually comes in this span, and it doesn't mean it's 10 to 10:30. It could be 9:40 to 10:52. Okay, so just understand that sometimes in that morning, you'll get that surge of people covering their positions, and then they continue back in the other direction. Now from 10:30 approximately, again, these are approximate times, from 10:30 to 11, you might get a pause. And this is where people are trying to find which direction the market is going to go the rest of the day or where the momentum is going to build. So this is kind of where decision making starts taking place, because of the bonds, because of the European markets. So this is where this pause may start coming into place, and people are trying to figure out where is that market going to head. After that decision-making process happens, now we get into the move, and that's where the move starts to happen. So somewhere around 10 to 11:30, the move's going to happen. Now, if the market all around it's going to move sideways all day, then it's going to stay sideways all the way through the move, of course, as well, through this time period between 11 and 11:30. Now, I find that after this move happens, if it does move either to the upside really well or to the downside really well, then the rest of the day typically continues to move in that direction. Now, if you have extreme volatility, it may move up, then it may move back down, and you might end up exactly where you started. So that's not to say that just because the move is going to happen, you're going to end up in the upside or the downside. It's just that things typically move in this range, and that is because the big traders, the operators, they're putting on their positions right before they head into this lunch period. Okay, so they're doing a lot of work. They're putting on their positions before they head out for lunch, which typically happens between 11:30 and 2 o'clock, because some people eat lunch a little later because they want to see what happens with the market. Other people want to go early because they want to be back in time before the market continues to power higher, where this action starts to take place around 2 to 3. So that lunchtime, typically this is a slow period. Okay, so it's a very slow period in trading. However, I find that if you're patient, if you're disciplined, you can find some really great catches on breakouts during this lunchtime period. So for example, if a stock for multiple months has been heading like this and hitting this support range, and it starts breaking, let's just say you were waiting for it for 2-3 months, and it starts breaking right there at that support range at that lunch period, it's usually a very telltale sign. It's usually a good confirmation that it does so during a lunch period, because the energy built up enough throughout all these other months, throughout all those other days. And if it happens during lunchtime where there's slow trading and light trading, then you know that stock is moving to the downside. And the same thing to the upside. If the stock's been moving like this for a while and you see it breaking out during that lunchtime or lunch period, then again, that's really a good sign to me, and I like getting into those kinds of trades. Now, after this lunchtime period and after this slow period is over, then you start getting into these final actions. And the final action usually will take that move earlier a little bit into that direction. So if that earlier move was a little bit higher, now we move sideways a bit, then what it may do is continue to pop it higher. On the other hand, if it was lower, then it moves sideways, it may continue to move it lower. So this little action period, so think of it this way. This is the initial move. This is the A to B part. For those of you who studied the technical analysis course that I have, this lunch part is the B to C part. This is the digestion or distribution. And this action is the C to D part. So that's our A, B, C, D pattern right there. Okay, so this action that starts to kick in between 2 to 3 is really where things start to pick up. And they can last all the way, actually these two can be together, they can last all the way till about 3:30. So again, you might get a final move, you might get a little extra pop right here on this final move between 3 and 3:30, or this action just combines and works together between 2 and 3:30. Now towards the end over here, what happens is between 3:30 and 4, what happens is you get a portfolio check or a portfolio calibration. This is one thing you want to pay close attention to, and you're always watching how stocks end. So if I'm looking at the stock market and how it ends, even if the day was moving sideways right here, if the market powers higher at the end of the day, that to me tells me it's strong. On the other hand, if the market's moving sideways or whatever direction it was, and at the end of the day there's a lot of selling, that to me that tells me the market is weak. And this helps tell me this 3:30, or it could be from 3 to 4, that last period of trading tells me typically what's going to happen the next day. This along with a lot of other things as well that I look under. But this 3:30 to 4 tells you, is there strength like this, or is there weakness coming into the market? Because what people are doing is the portfolio checks. Now the day traders are getting out. So are they going to hold on to their positions, or are they not? Also, the same thing, the coverings. People who are in for the day or for a few days, are they covering because they don't want the risk in their portfolio? That's what they're doing, is they're double checking things. And basically what they do is they do a fire drill, or they do a drill to say, what happens if the market skyrockets tomorrow? Or what happens if the market declines and drops tomorrow? Then what's it going to do with my portfolio? So they do the portfolio check and the portfolio adjustments during that period. And then after we close, of course, we get those after hours movements right here from 4 to 8. So that's basically the breakdown of the trading time zones. For me personally, I will trade between anywhere 9:30 and 4, and sometimes pre-market, sometimes after hours. But in general, I like trading right around this 10 to 10:30, or even anywhere between about 10 to about 3:30 is where I like trading. I don't like trading that last half hour, and I don't like trading the first half hour. And that's a personal choice. You can go ahead, and if your trading style matches up for it, you can go ahead and trade the first half hour. You could trade the last half hour. There's nothing wrong with that. I just find that because I like to trade a little bit more calmly, a little more patiently, I don't want to jump in too fast, too quick, because these reversals can happen. And if this action starts acting weak, and this final move starts acting weak, and the portfolio checks, people start getting panicky, especially if you have a wild market, those things can reverse what happened during the day. And that's why I don't like trading that last half hour, because then I might get whipsawed in, whipsawed out, because I'm focused on my plan. I'm focused on my goal. So for me, if I'm trading a stock that I got in right here at, let's say, 10:30 in the morning, and then by 2 o'clock in the afternoon, I'm out half of my position, then, by 3, I'm just double checking, 3:30, I'm just double checking that everything is still in order. Everything is still moving the way that it should. And even if it comes back slightly, then maybe, okay, if it goes back too fast, then I might be out of my full position, but I'm not going to put on brand new trades right away, because then what can happen is it does a pullback, then it'll come back up, and it'll start playing mind games for me. So that's one thing that I found and discovered over the years for me personally. But for you, if it doesn't work and you want to trade that first half hour and you want to get in early as possible, then by all means, just understand that a lot of times there's those reversals that kick in and happen, because there's those people that put on these after-hour trades, and there's people that put on the pre-market trades that are now, what happens here is they're either getting in and getting out, and that's what kicks in for that reversal. Thanks for joining me and watching this week's lesson about the trading timeframes. Keep in mind that these trading timeframes are just a guideline. If the market is acting static and it's moving sideways, then it may just move sideways for the day. If the market's constantly just pounding lower, then of course it may just continue moving lower without some digestion period in that midday afternoon sessions. And the same thing to the upside. If it's just continuing to power higher in a bull market and you just constantly have buyers stepping in, then you may not get those digestion periods. These trading timeframes that I discussed are just things to watch out for, because sometimes you have reversals, some things that will just change that trading atmosphere from going one way and then things change up. And especially if you're new, if you're just getting started, those are the areas that can really play on your psyche. They can really play on your mental focus within your own trading account. And that way you're not over trading, you're not getting in and out of positions a little too quickly, and that way you're not doing the wrong things, just constantly hopping in and out, because that becomes very costly, not only in transactions cost, but you're probably having a lot of losing positions as well. So keep those time frames in mind and in check as you're trading throughout the day. Now, if you're interested in getting notified when new training videos such as this one are being released, then go ahead and click this link right here. And when you click that button, enter your name and email address on that page. And that way, as I release new training videos or new training lessons, then you'll be notified through the newsletter as those things get released. Now, if you want to see some of the books or video courses I have available, then click the button right below this video and you'll be taken to that page. In the end, remember to do what you love, contribute to others, but most importantly, live life abundantly. I'll see you next time.